YouTube. So it's going to be a little bit different setup. And I do apologize in advance for everyone looking through this cord. We had some technical difficulties today, but we make do. All right. Welcome, everyone, to the Investors Performance Group meeting. I'd like to get a quick show of hands. How many of you guys are here for the first time tonight? Excellent. Look at that room. Nearly half of you guys here for the first time. That's awesome. Got a lot of people joining us on YouTube already. I can see people joining. So welcome to everyone on YouTube as well. We're going to kick things off. This is the Investors Performance Group. We do this meeting every single month. And our goal here is to provide value to you guys so you can go out, learn new skills as investors, implement what you learn, and just grow your wealth. So diving into it today. Always technical difficulties with technology these days. There we go. So IPG is proudly brought to you guys by the Kelly Fry team. We are a full service real estate investment team that specializes with investors such as yourself. We have everyone that you guys need to be successful, from mortgage brokers to lenders to home inspectors, lawyers, accountants, everything you need to build a profitable portfolio. Okay, so we've been doing something a little bit different. We are looking for some engagement from you guys tonight. And if you guys engage with us, there's an opportunity for you guys to win some prizes. So to do that, we're going to be utilizing either Facebook or Instagram. You guys can use the hashtag Investors Performance Group or IPG 2023 and make sure to tag the Kelly Fry team at Kelly Fry Team. And you guys can be entered in for our draw for the end of the night. So we're excited to see what kind of posts you get. You guys can post different ahas that you get, any insights that you've learned. Tag our amazing speakers we're going to have as well. We're excited to have them come out and share their insights as well. All right, for tonight's agenda, we're going to be kicking it off strong with Austin. Austin's going to be talking from Integrated Equities. Then we're going to talk a little bit about Tales from the Trenches. Something's going on there. And of course, then we're going to enter into our series of unfortunate Airbnb adventures. A lot of you guys have been liking this series. Diane is excited to share with you. Then we're going to go into our keynote, who's going to be Michael Russo. He's going to be joining us online. So we're going to live stream him with the Business Development Bank of Canada. Then we'll finish it off with some hot deals, some market updates, and let you guys on for your day. So without further ado, I don't want to keep talking to you guys. I'd rather bring up the people we brought to speak to you. We have Austin coming up, Austin Carrol. He is a dealing representative with Integrated Equities, an exempt market dealer that helps investors add real estate to their financial portfolios. For those who don't know, he was actually drafted in 2015 and signed by the Calgary Flames. So we have an NHL player in the room tonight. Give a round of applause for that. I mean, that's a hard thing to do. In fact, you know what? Listen, I'm from Edmonton, so there'll be a bit of a battle later, but we'll leave it at that. But he started using that to invest in real estate at the age of 20, and he's been investing in properties in Canada and the US, and he's going to be sharing some insights about what Integrated Equities can do to help you guys grow your portfolio. So without further ado, Austin Carrol, ladies and gentlemen. Thanks for coming up, buddy. I'll give you that. I'm also going to wire you up for a mic. So that's going to go on. There we are. Let's pop that there for you. And I'm going to get your presentation up.
Awesome.
All right.
Hello, everyone. How's everybody doing today? Good. As you mentioned, my name is Austin Carrol, and I'm a member of the Integrated Equities team.
Stand by. Got to share it to the people on YouTube. There we go. You're good to go.
Thank you, Cameron. Big thank you to everyone here in attendance today. Cameron, Kelly, and the team, they always put on awesome events. I've been here as an investor, an attendee in the past, so it's a real privilege to be up here presenting to all of you today. Today, I will be presenting on investing in purpose-built rental buildings across BC, and also an exciting new deal that we have on Vancouver Island. Before jumping into that, I'd like to talk a little bit more about Integrated Equities and how we help people invest into real estate. So who are we and what do we do? Integrated Equities is an exempt market dealer. You'll also hear the term EMD, and we help people add real estate to their financial portfolios. Our job is to find investments for you, do due diligence on the companies, research the markets, and analyze the deals. And our goal is to help create generational wealth through real estate. Here's a photo of our team. On the left, we have Cynthia Asen, and on the right, we have Taylor Steele. Both Taylor, and in the middle, we have myself.
They put you in the middle because you're the tallest.
They sometimes make me go down a little bit. But Taylor and Cynthia have been active members in the real estate community here in Vancouver and across Canada for many years, so they might be familiar faces to you. Both Taylor and Cynthia have also been up here on stage at IPG, so just happy they let me take the reins for tonight. What are some of the key characteristics of our investments? First is they're passive and hands-off. Many of our investors are busy working professionals. They want to participate in some of the wealth that's being created in real estate, but not actively manage these projects. There's no mortgage financing required, and most of our investments have a low minimum investment of just $25,000. These investments are cash, RSP, TFSA eligible. We find a lot of people with those registered accounts sitting somewhere, earning next to nothing, and they get really excited to be able to participate in these investments and seeing a little bit more growth in their accounts. And finally, portfolio diversification. We work with 6 different companies. We work with a US multifamily company, a Canadian multifamily company, a self-storage and car wash company, a land development company out in Ontario, and a land development company here in BC, which I'll be talking on today. Why do we suggest investing into some of these different products? First is they each have experienced management team. Many of these management teams have 10, 20, 30 years of experience in real estate and in their specific asset class. They each have a strong track record. This is something that all investors look at and is very important when evaluating a new company or a new deal. And all of the companies that we work with have a proven business plan and a proven track record. And finally, each have specific investment strategies. Each company is very narrowly focused on the investment asset class that they focus on. And really stick to what they know best. And when we talk to some of our clients about getting involved in these different real estates, it's the same reason we get involved. Between Taylor, Cynthia, and myself, we've all invested into these 6 companies. Back in 2015, as Cameron mentioned, I had the opportunity of working with Taylor and Cynthia on my very first real estate deal. I grew up in a real estate household, and I swear my father's favorite word was deals. I can still hear him on the phone saying deals, deals, deals. So when I thought it would look like what it would look like investing in my very first real estate deal, I thought it would look a little something like this. Professional, maybe in a boardroom, suited up, fancy pen. It didn't go quite like that. It went a little bit more like this. Young kid, no barber, no dentist, just really excited to be getting involved in real estate. I had just signed my first NHL contract with the Calgary Flames. Taylor, Cynthia, and some of my mentors really suggested, don't go buy that fancy new truck that some of your teammates will do. Start investing into real estate and accumulating that wealth. And I'm really happy that I did. And now I want to talk to you about West Urban and what they do, their purpose-built rental buildings here in BC, and a new investment opportunity that we have on Vancouver Island. One thing to note is that all the photos you see in my presentation are of West Urban's completed properties. A little bit about West Urban. They were founded in 2017 by Sean Roy and Terry Hoff. Both Terry and Sean have over 20 years of experience in the real estate industry and have developed over $1 billion worth of rental real estate. West Urban is in the business of developing purpose-built rental buildings. And purpose-built rental buildings differ from developing condos as they are built with the intention to rent upon completion rather than selling off each individual condo. They're based out of Campbell River and they have offices in Victoria and Nanaimo. And their primary focus right now is on the BC market and Vancouver Island in specific. They have completed properties all across Canada in Ontario, Alberta, and Manitoba. As I mentioned when introducing our team, we don't work with any startups. Each company we work with has a proven business plan and proven track record, and that's exactly what West Urban has. They've completed 15 projects to date, and they have sold 11 of those. So now the investment model. West Urban's investment model can really be looked at into 3 different stages. And first is the acquisition stage and handled by West Urban directly. West Urban will locate and purchase a piece of land for future development. These locations are in markets with a notable lack of affordable housing. They're in markets with growing populations and very low vacancy rates. And currently, now that they've finished 15 properties, they're in markets where they've already finished and completed different development sites. So they're very familiar with that market and that landscape. Once the land is acquired, West Urban will take the property through its entitlement process. And this will be any necessary rezoning or permitting. Once they've acquired the land, gone through the permitting, they'll finalize their construction loan agreement. And this can typically be anywhere between 75 and 80% loan to cost. The second stage is the development stage. And this is when they bring on investors. Once they've received their building permit, they've received their loan agreement, they will bring on investors for the remainder equity needed for the completion of the property. As an example, if their construction loan is 75% loan to cost, they'll bring on investors for the remainder of that 25%. This stage can typically take anywhere between 18 and 22 months to complete the development. The fact that West Urban brings on investors once they've received their building permits and they've received their loan agreement is a huge advantage. As I'm sure many of you know, getting permitted across the finish line can be a lengthy process. So to eliminate some of that timeline risk and investing when they're shovel ready, breaking ground is a huge advantage. And third is the exit stage. And this is the most exciting. This is where you as the investor will see return on your equity. After that 18 to 22 month development period, there's about a 4-month lease up period. And at this time, they will start the discussions with potential buyers. These potential buyers are large REITs or other large institutions that want to add a stabilized cash flowing building to their portfolio. They also have a second option, and this option is to hold it as a rental building. At this point, they will secure their takeout financing, return investors their initial capital, and operate it as a rental building. West Urban builds to qualify for CMHC financing through both energy efficiency and affordability. So they're getting more favorable financing terms than if you or I were to go get a mortgage on a rental property. There are 2 options: to sell upon completion or to hold as a rental building. But West Urban typically exits the projects once it's completed. Of the 15 properties they've completed, they've sold 11 of those upon completion. So the investment structure of these investments, there's a general partner and limited partners. The general partner is West Urban, and they manage the property. And the limited partners are the investors, and they will own LPA units into these investments. Profit share or any rental income that the property produces will be split 50-50, 50% to investors and 50% to West Urban as the general partner. Their overall investment period typically is 22 to 24 months. And just to break down the repayment waterfall a little bit more, once there's a sale or a takeout financing, the construction lender will be repaid. At that point, initial investment will be repaid to the investors, and then profits are split 50-50, 50 to investors and 50 to West Urban. In addition to bringing on investors, once they've already secured their building permits, received their loan, and they are shovel ready to build construction, I wanted to share a couple different highlights of investing with West Urban. And first is their vertical integration. They're very proud to have over 220 employees, so this allows them to take the investment process from purchasing the land onto sale of the property. They have a land acquisition team that is constantly evaluating and looking for new pieces of land to buy. They have architecture and design team that will take them through the building permits and rezoning process. And once they're ready for construction, they have an in-house development team. They also have ownership in many different sub-trades, and this allows them to assure fair pricing and that their timelines are met. Second is that the investment risk is limited. Investors are never called on for any cash calls or cost overruns, and West Urban is in charge of any construction loan guarantees. So as the investors, the amount that you invest is truly limited, and you'll never be asked for additional money into these different investments. And finally, transparent communication. As an investor, you'll receive quarterly updates as well as annual audited financials. And one nice thing is that they have live on-site cameras, all of their development sites. So if you're an investor and you want to take a look at where they're at in the process, you can log on and see the site, have a live shot there. I've touched on it throughout my presentation, but wanted to talk about it a little more is their track record. To date, they've completed 15 projects. 11 of those have sold, and their average annualized return to investors has been 25%. The investment duration average has been just 24 months. We evaluate a lot of different deals, a lot of different companies, but the fact that they have these type of returns in a shorter duration is really attractive right now, and we find a lot of our clients are intrigued by these stats here. Another great thing is West Urban has about 1,500 units they're looking to build out over the next 12 months, so they have a very consistent deal flow. And now I want to talk about our current opportunity on Vancouver Island in Duncan, BC, called the Meridian. It's a one building, as you can see in the photo. It's a horseshoe one building with a courtyard in the middle. It's 137 units with some commercial space on the ground floor. It's 6 stories, wood frame. And some of the reasons we really like Duncan, they have a very low vacancy rate, under 1% vacancy rate, and a consistently growing population. It's also not the first time West Urban has built in Duncan. This is their 3rd build in Duncan, and most recently, last June, they completed a 96-unit building just down the street. With headquarters in Campbell River and offices in Vic and Nanaimo, it's like building in their backyard, and they're very confident and familiar with the area there. So we talked about the different stages of their investments. They're entering into the 2nd stage. They've acquired the land, and they've received their construction loan for $38 million, and they will be raising an approximate $8 million through investors. They're expected to have their final building permits this month here in April, and that will start the 22-month investment period for this property. The overall forecasted annualized return for this particular deal is 27%. West Urban is currently available for accredited investors, and they do have a $100,000 minimum investment into this opportunity. Later this year, we are expecting them to open that up for both eligible and accredited investors and potentially lower that minimum investment. So this Saturday, April 22nd, we're taking a group of our investors, a bus full of 56 investors, onto Vancouver Island to take a look at their properties. We're going to go take a look at a few different stages of their developments, a couple pieces of raw land, the one in Duncan I just spoke on, as well as one in View Royal where they're in mid-construction, and the one in Duncan just down the street where it's going to be a completed building. So you can kind of see all 3 stages of the investment. We do have a few seats left. I know it's this Saturday, but if you have any available time, we'd love to have you onto that tour. So just let me know, and we can get you onto that. And that concludes my presentation. So I appreciate everyone listening, and thank you.
All right. Thanks, buddy.
Thank you.
Let's open it up for any questions that anyone has. So we'll open up. You guys are on YouTube. Feel free to drop any questions you have. And live, any questions? Yes.
For the properties that they continue to hold, I'm assuming there's an in-house management team that manages the rental units in there?
Yeah, so they'll manage. Typically, they do look to exit the buildings upon completion. They do have the option to hold. Currently, right now, they're looking to exit another 2 of those. One of them down the street in Duncan. They own it 50-50 with the Cowichan tribe there. But yes, they do have an in-house management team that operates when they hold the asset.
What kind of rate of return do you get if they end up holding it and they just do the buyout?
Yeah, so on our forecast, we have the sale, the exit, as you'll see there. When we go into these, if any of our clients have questions like that, we do a pro forma. On this current deal, if they were to hold it, it was about a 22% continued annualized return on the investment. If you stay in, and we're happy to break that down. If anyone has questions, West Urban is great of doing a full financial spreadsheet on the hold, but with their intention to exit on these, they do their performance upon that.
Okay. Any other questions? Yeah.
What do you see as the major risk, the highest risk of investment like this?
I mean, yeah, the risk associated with a lot of different investments in the real estate is market risk. You know, are rents going up? Are people moving there? Is there demand for people to go and rent in these affordable rental units? We're going into markets, and so are they, in places where the rental growth is continuing. They're seeing increase in rental numbers, but also vacancy rates are really low. So I think the risk would be, you know, people in that they're not building luxury. So it's not, you know, people aren't going to be able to afford that. These are workforce affordable housing units. So I would say the risk is just, you know, people aren't looking to go to Duncan, or people start moving out, and it's just not a desirable place to need a rental unit.
Have the high interest rates had an impact on the project? Also the building financing?
Yeah, I mean, interest rates are going to affect all portions of that. They definitely keep that into account. As I mentioned, they do build for CMHC financing, as the group was talking prior to this. So they are getting more favorable financing terms. You're not seeing the terms that they were getting in the past year or so. So it is something to consider into these projects. And they do, and they have all those risks analyzed. And part of our team's due diligence is we go through and we look at you know, where those risks are at. Have they taken them into consideration? Are they being overly conservative on their forecasting? So it's definitely something we take into consideration.
All right. Excellent. Any other questions? No? All right. I just want to ask, what was harder, getting into the NHL or getting up on stage and public speaking?
I mean, when you start public speaking, I think that feels like the hardest. You get in front of a crowd, and when you're playing hockey and you got your equipment on, you can say a lot of ums, a lot of pucks in deeps, you know, forecheck, play hard. Here, you actually have to know what you're talking about.
There we go.
Yeah.
Excellent.
Yeah.
Round of applause, ladies and gentlemen.
Thanks.
Thanks, buddy. Appreciate it. I'm going to grab that back over there. Thank you. All right. Okay. So we're going to keep the ball rolling here. And does that work? Oh, 1 second. Let's get that started. There we go. All right. So this month we have an interesting Tales from the Trenches. I'm going to unmute this so you guys can hear the thing here. Let's see if this works. You might hear me as well. What's going on? I'm going to mute that now. There we go. All right. Can you believe it? After 7 years, we don't have a Tales from the Trench for you guys. Can you believe that? It's incredible. So we do know there are some brewing, though. So for those guys who don't know what Tales from the Trenches are, Tales from the Trenches is a segment that we've been doing literally every single month for a year now, where we show you guys the other side of real estate, right? Because we're talking about the money you can make and the returns on investments. But then when you buy that first rental property, Taylor, I know you know this, when you bought a rental property and what starts to happen, you have to put what into those rentals? People. And as soon as you add the people element, well, that's where things can kind of go off the rails. So our Tales from the Trenches segment, we actually go through the other side of real estate investing, showing you guys what could happen so you guys can either avoid it or just not have to have how to navigate it if it does happen. We've had situations with tenant evictions. We've talked about people dying in properties and what could you do? Because that could happen, right? We've had floods. We've had other situations. This time, though, we went around to our sources and we said, you guys have any great tales? And this month's been quiet. However, I did get a teaser from Jim, who many of you guys know Jim. He did mention that he's brewing something up for next month. And, well, if you've seen his Tales from the Trenches, they're kind of crazy. So we're talking like gang member crazy sometimes, wild. So let's see what he comes up with. But we're going to continue on because we do have an Airbnb adventure. Oh, yeah. Again, don't forget, guys, you can post your pictures, your stories, everything like that. Make sure you tag the Kelly Fry team. We got a great gift for you guys tonight for those who participate. So make sure you guys use those hashtag, and jury is watching and seeing all of your guys' engagement. So feel free to do that. All right. So without further ado, I'm going to bring up Diane. Diane is going to talk about this series of unfortunate Airbnb adventures. Now, the case with Airbnb adventures is very similar to the Tales from the Trenches, but it's focused specifically on Airbnb. The reason why we did this is because it's a strategy that's becoming more and more popular here in the Lower Mainland to maximize cash flow. And we absolutely love the strategy. The returns are phenomenal, but they come with their own sets of problems.
Yes.
And so that's why we thought, well, we're going to let her tell you about one of the most recent ones today.
Perfect. So for those of you who know, I helped Kelly with her 20 Airbnbs. And this week we have a tale that's a little bit different than what we usually have. So I'm going to start off by take quick action. And we got a message through Kevin. Hi, Kelly. This is the Constable Madison with the Mission RCMP. So he found a way of getting into our Airbnb messages and messaged Kelly because he needed her to contact her. So obviously the first thing that he did was, well, we put out his number, but Kelly called him. So what the issue was is that there was one of our guests who had a seizure and called the RCMP. Basically, he had to go and follow up and get into our unit. So Kelly goes into action, we all go into action and try to get him down there. So the best thing we want to do is for most units, you want to make sure that we have our cleaners in place. I called the cleaner and Kelly called the constable. So the first thing that I did was ask if our cleaner could go down there and let him in or get him into the building and vice versa. So what happened is Jasmine went down there with the constable and he knocked on the door, could not find the gentleman. Could not find, knocked on the door, and his concern was that he was going to be in there, and then we were obviously concerned that he had had a seizure. But the truth of the matter is that he pinged his phone, because the RCMP can do that, and found him somewhere else. So those are just some of the small things that can happen with Airbnbs. The gentleman is okay, just so everybody knows. He was fine, he was somewhere else. But what we really wanted you to take away from that is to have a good team with you. Cleaners, repair people, managers, property manager, everybody came together to try to get that constable in there quickly and solve the situation that we had at hand. That was basically the story that Kelly had for you guys today. She might have had a little bit more, but she wasn't able to make it. And yeah.
Awesome. How about
ask me a few questions? Yeah.
Give your top 5 best tips right now for running Airbnb, seeing as this is continuing to be something more and more people are jumping into.
I think the top 5 things I would say is good cleaners. That's probably my number one, because cleaners will go down there. They will add supplies. You can call them at any time. They usually live close by. So they'll go down there. If a guest messages you and says they need batteries, they'll go down there. Or if we just had another situation where we had a guest that we didn't want to allow in, but she had our code. So in order for us to make sure that the guest wasn't there, I called our cleaner and she went down there, knocked on the door, and the guest wasn't there. So just having those extra perks from her and being able to get her to go down there and check on a few things for us, and so that we don't have to constantly go down there, because Kelly, myself, and Sid wouldn't be able to go down to all of the Airbnbs. Second, I would say concierge and repair. We have a couple that's one that does repairs and the other one does a concierge. So if the internet goes down, she can get it rebooted from our end at any time of the day. We can contact her. She'll contact the guest. So that's 1, 2, and 3. Property managers, absolutely. And make sure that you have, obviously, a good stager and extra linens. Linens are huge. So whenever you see linens on special or sheets, towels, anything, buy bulk, because strangely enough, what we find on sheets or what the cleaners find on sheets, they need to be replaced. So we've had things that we can't quite, it's blue, it's pink, you don't know what it is. So we go through sheets quite a bit. So those are my top 5, I would say, for sure.
Awesome. Excellent.
Yeah.
All right. Just want to kill a little time as we're just looking for our keynote to
Was there
jump
any
on.
questions?
Does anyone have any questions about Airbnb and management?
No.
Surprised no one has any questions. How many people are running an Airbnb right now? A few. All right. Rainer.
Okay.
So I have a antidote to your tales from the trenches in my Airbnb this last week.
Yeah.
I had a most wonderful miracle. The lady, couple who were staying there, the lady had a baby girl. So she went off to the hospital and had the baby, and that little life is now in our Airbnb.
Oh, wow.
So I'm just delighted.
She went into labor in your Airbnb?
She did.
Oh, wow.
Did you charge extra.
one more guest. That's so funny.
As a super host, I said, anything we can get you, anything we can do, is it warm enough? We have
Yep.
a Nest thermostat that we remotely control, so we were happy to crank up the heat for her if that's what you want.
Oh, that's nice.
Anyways, it's just wonderful. We've had our trials and tribulations.
Yes, it's always good to have a good story.
all presented.
We have good stories. We just tell you guys the unfortunate ones. Yeah.
And to tie in with your linen and towels,
Mhm.
we did have a whole set of towels ruined, including one towel was mainly pink. I think she dyed her hair
Mhm.
and used our white towel to
Yes.
wipe up the mess. But anyways, I hear you. We
Yes.
always stock up at the IKEA clearance area there.
Yeah.
We bought most of our linens at IKEA at 50% off when they used to offer great deals there.
They did.
It's good.
We got a few there. And you just have to make sure, because we've had times where we had every single sheet and every single towel used for, cleaning after the dog.
Yeah.
So.
We have two complete sets. We have 2 units in the house, and
Yeah.
for each unit we have 2 complete sets. So if it's a fast turnover, like we just had one, a checkout at 10 and a check-in, actually they wanted early check-in. So, we have about four hours to turn it over. So we use an alternate set.
Oh, absolutely. You have to. And that's another good, you should have extra, especially when you have to do a quick turnaround. We go 11 to 4. So we give enough time just in case there's an issue. And then we have extra sheets as well in our storage. Yes.
What do you guys charge your clients for the Airbnb property management? Or is that a-
That's a
Liddell, why don't you
Liddell
stand
question.
up, speak loud? What do you
Yeah.
charge for Airbnb property management?
I actually just finished setting up my first Airbnb. Not something I normally do, but my client was limited funds, so I said, I like to decorate, let's do it. Got it done well under budget, and normally for management, Airbnb is gonna go from 15 to 20% a month. This one is in Chilliwack, so we're talking about gas, the
Mhm.
travel time, all that big fun stuff. So that one's gonna be 20%. I'm in Maple Ridge. If it's closer to me, I'm gonna do another one just up the road. Then I have the flexibility of dropping, because my job is just as property manager to get you all cash flow.
All right. So for those on YouTube, Liddell, she does management for our team, for anyone doing Airbnbs, and it's 15 to 20% depending on distance. And then I saw Ray, you had a question as well.
No, he asked who has Airbnb. That's
Got it.
when he raises his hand.
Got it. Okay.
He's like, what? Any other questions?
I mean, Ray had a great thing when you were dealing with Strata. I heard what you were saying one time about Airbnbs versus tenants. I heard you had a great a response to a property manager, Strata manager, about why it's better to keep Airbnbs and properties than dealing with tenants.
Oh, well, you can get rid of Airbnb.
Quicker. Yeah. Yeah.
Tenants are a pain.
Yeah.
Tenants are a pain, and you can get rid of the Airbnb
Oh,
guests
sorry,
easier.
what, were you at that meeting?
I've been informed about that meeting. Excellent.
Why did I miss that? I would have totally participated.
Kelly got me on this.
Well, thank
They
you.
want to kick out Airbnbs, and I said, they're way better than tenants sometimes.
They can be.
I could get up there and spend all night on tenants.
Oh, I know you can. All right. Okay, well, we're still waiting for the keynote to join here. He's just having some technical difficulties, it sounds like. So we are going to jump past him for now. When he gets onto the StreamYard, we'll bring him up in a bit. But for now, we are going to jump into the market update so we can keep you guys going tonight, get you out of there. Now, the market is definitely changing out there right now. So what I'm going to be showing you guys is the year-over-year stats, which is pretty typical, but I've got some extra slides in here this month that I'm going to go through to help you guys see what's happening in the market. Now, typically what we like to do is we'll start out east, we'll move our way west, and then kind of see what's going on out there. So first and foremost, we got the Chilliwack market here. And well, again, month over month, we can see, or sorry, year over year, we can see the hit that we've been seeing typically every month. So 23% drop on the detached. We've got a 23% drop as well on townhouses, an 11% drop on condos. But here's the interesting things. I mean, taking a month to sell properties right now, a little over a month for condos, but we can see a massive drop in detached properties over last year. This is the one that I really want people to focus on. As investors, we got to look at the inventory aspect, because what was the common thing we heard before? It was low inventory markets, right? We're still in a low inventory market. And if last year was one of the lower inventory markets that we'd seen, and we're now continuing to drop, we're going to start to see that impact the market as buyers come back. Obviously, it's a little bit up on the condos and townhouses, but if you look at it, 70 townhouses and 66 condos, still not a lot of inventory, even though it's still up over last year. So Chilliwack, definitely down over last year, but things are definitely changing. Abbotsford, very similar numbers. You can see actually condos took a bigger hit in the Abbotsford market. Days on market, all about a month. But again, we can see a drop in the inventory with these two categories here, and a little bit up on the condos. Mission, I love Mission. Who else loves Mission? Oh, there he is. Ray's actually got some stuff going on in Mission right now. Mission has seen some of the similar drops. Townhouses, not so much. And condos show a huge drop. But condos are a really tricky one when it comes to the Mission market. For those who haven't been out there, there's not a lot of condos that have been built over the last umpteen years. Now, that is changing. We have a lot of developers now moving in, and they're actually adding a lot of inventory. But you can see here, we had a total 209% increase, but only 34 actual condos hit the market, right? So not a lot. Only 21 townhouses, and we're down a little bit on the inventory as well. We're seeing that detached is really starting to show that negative symbol over last year. Langley down 20%, 16.1% for townhouses, and condos at 11.6%. But again, we're seeing that inventory drop in a lot of categories. Up on the condos. Now, Langley's another interesting market. Opposite of Mission, it has a lot of condo developments that have happened and continuing to happen. It's really densifying quite quickly. And so because of that, what happens with the Langley market is, suddenly a pre-sale will go on sale. You'll have everyone buy it, and 6 months later, everyone slaps up their listings to try to flip the assignment, right? Then the building closes, all those units come down, and then the resales start happening. So that one fluctuates quite a bit in the market. So it's not 15% is not that high on the market at this point. All right. Surrey, similar numbers here. We're down 22%, 14.5 and 17, but we're down across the board on inventory. Very common theme we're seeing here. Maple Ridge, so same thing, but up significantly on the condos. Up a little bit on detached here, but down on the townhouses. Very hard to find townhouses right now for investors. Yep.
Just a quick question. When you say that inventory is down,
Mm-hmm.
prices are down, but inventory is down.
Yep.
Would you say that because inventory is down, that it's going to put upward pressure?
Hold that thought, and I will get to it in a bit because I have some special things I'm going to show you guys. So, all right. We do like to go outside of the Fraser Valley. Obviously, a lot of our clients are buying in the Fraser Valley because that's where it makes the most sense from a cash flow perspective. So the rent to purchase price ratio. But we do have investors who buy downtown. I think Vancouver itself is a great opportunity for investors as well if you know where to look. But you can see here, prices are not down in the 20 and 30% like we saw in the Fraser Valley markets. 10% on townhouses, only 4.2. So condos didn't really get that affected from last year. But we can see we're down on inventory here, down significantly, almost 30% on houses and detached. And when we go into Vancouver West, you can see barely a price drop over last year, because at the end of the day, if some people are paying $4 million, they're likely not being impacted by some of these changes as much. Probably a lot of them are cash buyers, so they're okay with what they're purchasing. 6.2, an average of still 1.4, and just under $1 million. It has dropped a bit on the condo market. Downtown right now, I still really feel there's some great opportunities in downtown. So if you guys are looking to get into that market, give me a call. Let's talk. But again, we're down on the inventory. So to your point that I think is really important to look at, these are year over year stats. So obviously the price drops are reflected the fact that we peaked out in February, March, right? So depending on the market, these are March stats for this year. So if we look at the peak to the lowest point of the market, we're going to see the negatives. But what we want to start looking at is the changes we're seeing in the market right now, because things are absolutely changing. There was a really bad word that a lot of buyers wanted to avoid back in 2020, 2021. Does anyone know what that word was? Started with an M. Multiple offers, right? Nobody wanted to deal with multiple offers. But unfortunately, how many of you guys are realtors in the room? How many of you guys have been in multiples in the last week? Yeah. See, we're starting to see it more regularly now because of the certain things. One, inventory. So to your point here, when we capped out in the inventory last year, you can see the trend. You know, this is over the last 3 years. So this is during the whole pandemic. Our inventory is much higher than it has been during most of that time frame than we have right now. So obviously we had a high amount of demand at that time. Now we have even less inventory during the peaks of the market in the COVID times. We're going to see that upward pressure start to come as more and more demand picks up. Now, a couple things that are going to impact demand. Firstly, we are seeing now what happened with interest rates. They've stabilized, right? So the Bank of Canada has now done 2 announcements where they've held the rates. And if anyone knows what's been going on with the fixed rates, they've dropped, right? So a lot of the stuff that's happening down in the US with banks failing and things like that put pressure on the bond yields, and we saw fixed rates come down. So that's impacting our inventory where people are not wanting to sell because they don't know what's going on. They don't want to lose all the money that they've lost. So that's that impact right there. Now, sales, here's the key component. As inventory is low, you know, we had some high sales back in 2021. It was insane. This is kind of where we started to peak January 2022. We came down on the sales. That's where the news started saying doom and gloom, right? Because sales are down 60%, sales are down 70%. But look what's happening with the curve right now. So this would have been January, February, March. Okay, sales are significantly starting to increase. That's a pretty sharp curve. This green one here is the Real Estate Board of Greater Vancouver. Blue here is Fraser Valley. And then we've got the Chilliwack board right there as well. Average to listing contract days. So this is our days on market. Again, what is starting to happen? We saw the days on market. You know, we ended here where things were selling in a week, right? And all of a sudden it took, you know, we got 30 days here. Suddenly some markets like Chilliwack, it was taking over 50 days to sell a property. Now we're seeing the days on market starting to drop, which means that when you put a new listing up on the market, buyers are scooping it up much faster than they did before. And the final point, obviously, the one we all want to pay attention to is prices. Average sale price. We are starting to see, we peaked here. This is February right here. So this is kind of where the peak of the market was. We saw the decline, you know, Greater Vancouver, because Vancouver itself was a little more stable during it. That kind of, you know, bumped around here. Fraser Valley took a nosedive, but you can see the general curve is now moving upwards. And again, that's because we're seeing buyer confidence starting to come back into the market. They see 2 months of no interest rate hikes. They're going to say, maybe now's the time I better jump in just in case they raise it again. Or if they're working with a great broker and they say, hey, we can get you sub 5% now because the fixed rates have gone down. Suddenly that's increasing buyers' borrowing capacity. And it's meaning they're saying, you know what, let's probably jump into the market. I can lock in. I'm okay at about a 4.5. Most of the stress tests before were at about that 5% anyways in the past. So people are able to get a little bit more bang for their buck. I got a buyer right now. When I started looking for him, we were looking at about 650. Because of the interest rates on fixed going down, his budget's now gone to 740. That's a vastly different property when you're thinking about it, right? So we're definitely seeing that trend right now. So the housing market continues to build momentum. You know, you got the Rock here saying, let's go. This is what I think investors should be acting like. Let's go. Now's the time, because if we wait for everyone to start getting into the market, what's going to happen? 2021, 2022 could happen again, and investors are going to get beat out in the market because we are not emotional, right? We are numbers based when we're looking at our properties. And all of a sudden, if you get a buyer, let's say there's 20 buyers going for a property and 15 of them are super emotional, they have to have it because it's their dream home, it's their future home for their kids, you're going to get beat out every time. So take a look at these numbers, take a look at it, what's going on, buy with the right strategy in mind to hold, and we'll be able to start to see us come out on the other side of this. Now, is there room for some bumps? Absolutely. We don't know what's going to happen, but buying with the right strategies in mind where you can maximize cash flow and holding power is definitely going to put you guys in the right position, because we have started to see the bottom of the market already, and we're starting to see we're coming up the other side of it. Again, you can't time the market, but it's time in the market, right? Okay, lastly, a little bit of words of wisdom from the real estate board. March 2023 saw the second consecutive month of growth in the Fraser Valley. Although still below seasonal norms, this trend is an encouraging sign that the region continues to head towards an increased market stability. After months of uncertainty made it difficult for buyers and sellers to re-enter the housing market, we may well be seeing a turning point. The pause in rate hikes has helped to restore a much-needed sense of predictability, which is building consumer confidence. As a result, we're starting to see more traffic at open houses, along with more multiple offer situations. While the market demand continues to trend up, we still face an uphill battle on the supply side, which is keeping prices elevated. Again, it's that basic supply and demand, right? It's, I saw someone on TikTok recently, and he was just like hammering, like, all the realtors ever talk about is supply and demand, supply and demand. It's a basic economic fundamental principle that really drives the Vancouver and Fraser Valley market. So we need to understand the relationships between it so we can take the right steps as investors to build our wealth. All right, with that being said, I'm going to take a pause now myself. We're going to bring up Mr. Michael Russo. I'm going to bring you up on the screen. All right. Michael, let's do a quick test. Can we hear you?
Hello. Yes, you can. I can't hear you anymore, though. But that makes sense because I'm presenting.
All right, Michael. So I will allow you to, if you want to hit the present button, and then you should be able to share your screen.
Okay. Can you see that? Great. I can't see anything on my side because I've got it maxed out here, but hello everyone. Thank you for your time. My name is Michael Russo. I'm a senior account manager with BDC, the Business Development Bank. Here to talk to you specifically about commercial real estate financing. So first I wanted to thank Cameron Manning and the Kelly Fry team for having me. So very much appreciated. But yeah, so just to jump into things here, I'm a senior account manager. I work out of the Vancouver office downtown. I used to work in the Tri-Cities, but recently changed. Either way, I finance properties from Vancouver all the way down to Maple Ridge. And I'm here to talk to you a little bit about how you can, work with BDC to serve your clients better. We work with all sorts of different partners, and our goal is really to accelerate entrepreneur success. I don't know if you've heard about BDC before, but we are owned by the federal government. We're a Crown corporation, and our mandate is really to help create and develop Canadian businesses through financing, venture capital, and advisory services with a focus on small and medium-sized enterprises. And that kind of fits in with you because I'm sure a lot of you have customers who are exclusively entrepreneurs like yourselves. And we are the bank that is only devoted to entrepreneurs. So we only deal with businesses and sole proprietorships. And most of our clients are smaller clients, but we deal with large corporate clients, mid-sized businesses from up to $15-20 million, and small businesses as well, a couple million or even $500,000 or $100,000. And we're also with Canada's first certified B Corp bank, which means that we follow all the utmost respect to rules relating to the environment and how we treat everyone. And so why entrepreneurs? And it's basically because they're vital to Canada's economy. 90% of the private sector is employed by small and medium enterprises, which is 10.5 million people. And this is kind of an old stat, so the numbers are higher now. 95% of the private sector jobs since 2005 were created by small and medium enterprises. And that probably, that's specifically talking about the private sector jobs, and that probably rings true until today as well. So they're obviously vital to Canada's economy, as they produce, 52% of the GDP, which is huge. And so really, by BDC helping these small and medium enterprises, it helps grow the economy, which helps create jobs, which means more tax revenue is paid to the government, and more entrepreneurs are benefiting from higher profiting businesses. So we really do help people. Because it is our mandate, and it's unlike what another bank's mandate is. Nothing against the other lenders. They're all important, but our mandate is specifically for entrepreneurs, and we don't deal with anyone else. And it's kind of what I was saying here. Our mandate, we play a complement. We're a complementary lender to other financial institutions. So we kind of fill the gaps in the market, and we maximize financing options. And I'm going to get into that a little bit more when I talk about the commercial real estate financing. But we do something that's kind of unique in the market, and we're one of the first banks to be doing this. But our clients are more successful. I know that sounds crazy, but BDC's financing clients posted higher sales growth, up to 14% more than similar non-client companies. So that's based on Stats Canada analysis. And why is that? It's because of the way that we do business. We're a little bit more entrepreneurial. We're a smaller bank. We're nimble. Our goal is different. It's not about shareholder returns or maximizing shareholder equity. It's about the entrepreneur. So we do tailor each product or each loan or mortgage specifically to the specific scenario of that client. And it's our unwavering commitment to the success of Canadian entrepreneurs. Oh, just like that. So this is just some more quick stats about BDC. And these numbers, this is a couple-year-old slide deck. I couldn't find any new stuff on this, but we had 42,000 clients. We employed over 2,100 people. At that time, we had $26 billion in financing committed to all our different clients. And 94% of our clients are satisfied with our services, which is a really high percentage. Most banks probably can't say that. And I think it's, again, because of the way that we do business. I did come from one of the chartered banks, great places to be working with. But BDC's approach is it's different. And it's a different mindset. And that's just the way things are. So why choose BDC? Here it says for a unique client service experience. We look at your business as a whole. So this is something different. We're not just looking at it from like a banking perspective. We'll want to learn about like the whole aspect of your business before we determine if this type of leverage or loan or financing is right for your client. We try to optimize your clients, financial resources by offering, again, specific types of payments. So I've had certain clients that their business is seasonal, and this is a bad example, but really we basically tailored their payments that 6 months of the year they paid principal and interest, and then the other 6 months of the year they paid interest only because it was really tough on their cash flow. So we do, depending on the scenario, tailor things specifically to how clients or how their business operates. We also have advisory services. We actually are the nation's largest advisory service or consulting firm. I know no one would have ever guessed it. I had no clue myself until I started working for the company, and then I learned about all these different services that we offer. And I'm going to just go to the next slide here. We're there, rain or shine. Our loans are non-demand. Again, something that differentiates BDC from the other lenders. This means that when you sign a loan agreement or a mortgage with BDC, we're committed to the entire term, and we can't demand repayment if the market goes down or we don't like this certain industry. Like I've seen it before in banking where, the banks get scared about like retail stores or, certain sectors of the economy, forestry, for example, and they decide that they don't want to do any business with them and they call their loans. BDC's loans are non-demand, which means they're committed for the entire term that you borrow with us. And so that's unique in the lending industry. What we don't do, we don't have any bank accounts. We are a bank that lends money on projects, like if you wanted to buy an investment property or you buy an operating facility to run your business out of. We can do that sort of thing, but we don't offer bank accounts, GICs, lines of credit. Residential real estate financing is actually not permitted under BDC. We only finance commercial real estate. We don't do credit cards or interest-free loans, which is kind of not true. There's a caveat on that one, but that's for maybe a question later on. So really, just kind of to highlight, we specifically come in. If you have a project like you need to buy equipment or you need money to be injected into your business, we can do that type of financing, but we don't do any investment types of things. We don't have credit cards and banks accounts and lines of credit. We're a term lender. And right into financing, unparalleled flexibility. And that's really the difference. We provide working capital loans to small businesses. That's probably the biggest amount of business that we actually do. If your client is interested in buying a business, we can finance the purchase of a business. If they want to invest in real estate, we can finance an owner-occupied type of property. We do also investor real estate financing for supplier premises or income property lending. We do some of that as well. If your client is looking to buy equipment for their business, we can finance that as well. We do a little bit of startup business financing. That's a bit more so for people that were working somewhere and they've gone off and started their own company, kind of doing the same line of business. We can help with that. If you want to upgrade your technology, we do provide financing for that. Transferring your business to the next generation, same sort of thing. That's other types of unsecured financing that we can do. And we also help with clients that are looking to export to new markets. Being part of the government, they want to grow the economy, and exports have a really strong impact on employment and GDP. So we do focus on businesses that are doing that sort of thing. Manufacturing, exporting, food processing. Those are some of our target types of clients that we like to finance. Financing designed for manufacturers. So one thing that we do differently, again, is that we can basically postpone the principal payments for a manufacturer for up to 24 months on an equipment purchase. We can finance 100% of the equipment that they're buying and finance it for a very long period of time. We do provide what we call equipment lines as well. That's not on the slide here, where you can give a list of equipment and then go out and purchase all that. I know it's not really real estate related, but it's just something, an extra value added that we kind of add to the package. So when you're talking to your client and that they run a business, and maybe they manufacture something, at least that they can purchase their equipment and their real estate all at the same place at BDC. So some clients need to buy inventory, or they might have a big project or a contract coming up that they need to buy inventory for. Or take advantage of supplier discounts. So we have specialized working capital financing. We can actually do more than the $750,000 it says here, but really that's the truth, is that if one of your business clients needs to, they have an opportunity out there and I don't mean to buy a business, but maybe to supply a contract, and they need $500,000, we can provide a loan termed over 8 years to, so they can get that contract, buy the inventory, and complete it. We also do technology, IT financing, repayment over 4 years. Lots of companies want to upgrade their computer systems or their all sorts of IT stuff, servers. We finance all of that. And really, the reason that we do all the IT financing, and there's actually a little bit of a lower threshold for that, is because the government surveys all the companies out there, and they find out that in Canada we're slightly underinvesting in IT compared to our peers out there, and so they're trying to promote upgrading your computer equipment, having the latest software, because that makes every company more efficient and more, so they can do more sales. They can be better, and that makes Canada as a whole, more efficient in the world stage. And here we go, commercial and industrial real estate financing. It's a big part of what I do specifically. A lot of my clients are looking to buy, typically it's industrial real estate, though we do office space as well in Vancouver and elsewhere. But I'd say most of them are looking for more so of an industrial type, but retail, commercial, and commercial office and industrial are all accepted. And it says help your clients expand and modernize commercial and industrial real estate financing. We can do owner occupied purchase of land and building. And if you're also looking to invest and rent out the property, if there's a 5-year lease in place with the tenant, we can determine the lending value on a property like that and do financing as well. Also, if you have someone that's looking to buy a piece of land and construct a new building specifically for their business, or they need a second location, or they want to duplicate their business in another market, expansion or improvement of the existing premises, we can also finance that. Any type of real estate financing we do it over 25 years. So we do a 25-year amortization, and there's no questions about it. Whereas in the past, other commercial lenders typically did 15, 20. That most of them do 25 now, but it wasn't as prevalent before. And then another kind of neat little thing about BDC, back to what I was saying, we provide advisory services. And that's a good way to get out. We can help you with your plant layout, for example, because we have this network of advisors that work across the country for us, and we draw on them, whether it's for a project out here. They can help you with your operational efficiency, the way that your equipment or your business is going to be run. We do that type of service as well. It's a fee for service, but it's something, it's a way of having someone else come in with a second set of eyes and provide an opinion and a way of improving your business without, your biases that are there. So that's, it's a very good offering, and it's improved a lot of clients. I've had some clients that were actually leasing I think it was like 80,000 square feet. And they did an operational efficiency mandate with us, and they found out that they only needed like 30,000. So they decided to downsize and sublet the remaining real estate until the company grew and got bigger. But in the meantime, they were able to reduce their overhead, rental expense by subletting half of their space out, and then making the business, more profitable because it was more efficient in this smaller location. And that's just one example. So with our real estate financing, we provide flexible terms and conditions. And one of the main things that differentiates BDC is that we typically provide a high percentage of financing or high ratio financing. And we typically start at 85% loan to value. That means you have to put 15% down, and we finance the remaining 85% over 25 years. We can also add a year of interest only onto that, because there is always an additional expense when a business has to move into a new property. It costs a lot of money, and it takes time, and sometimes there's doubling up of rent, etc. And so, we can add an extra year of interest only. I know it's not on the slide, but yeah, it's something that's very beneficial because it helps businesses cash flow. Here it says 36 months. It really depends on the scenario. In some ways, we can do it if we have a good explanation, if there's a reason, maybe it's a construction project, etc. But one thing different with BDC is that we don't actually take your personal assets as collateral. Like I was saying, that we don't do any residential financing. We're not allowed by our mandate to put a mortgage on a residential property, which means that if we have you with a commercial mortgage with us, we might have a small personal guarantee from you, but we won't take any of your other assets, personal assets, as collateral. And again, I did mention before, we're non-demand lender. So that means that, you don't have to worry that if there's an economic downturn, that the bank's going to come and, tell you to go take your business to another bank, or, basically kick you out. So that's one of the benefits of having your mortgage with us, and you have all your rest of your banking with another bank. You need to have a bank account, a line of credit, your credit cards, all your online banking platform, e-transfers or wiring money. Everyone needs to have a bank for all those services, but there is a benefit of having your real estate financing separated, and this is one of the main ones. Also, our financing, we don't require appraisals up to a certain dollar amount. Again, this says $3 million. Typically that's most commercial banks typically want an appraisal, and we will go with the purchase price or the assessed value depending on the scenario. Like we don't take the lesser of the two. We typically use the purchase agreement. Now on larger buildings over $5 million, we probably would want an appraisal. I know it says 3 here, but this again is a bit of an older slide. So that's another something that'll potentially save you a bit of money on smaller real estate transactions, or save your clients some money. They won't have to get an appraisal with us. So one type of financing we do, like I said, is real estate suppliers or income property, businesses whose primary objective is to lease premises to unrelated tenants. So we typically like to have tenants with a national or regional reputation, AAA tenants. And that any type of property like that we have a really good chance of giving you some good financing on it. And this says projects are eligible up to $7.5 million. I wouldn't put too much thought into it. It really depends on the scenario and the cash flow. The next one here is an owner-occupied example of a wholesaler and wholesaler of lighting components who wants to purchase land and building to consolidate all operations. So they're currently in 3 locations, and they're paying rent to 3 different places. One of it's it's just inefficient to run their business. So why don't they consolidate in one location? So in this scenario, there's a potential to buy a property for $1.5 million, and the client has to do about $250,000 in renovations to the project or to the property. And so one of the differences that BDC does is we actually add them together. You can see there that we took the 1.5 plus 250,000 for a total of 750,000. And the way we did it, we took out our calculators, and the client was strong. So we said, you know what, we're happy with you putting in 150 of the 1.75, which is 8.5%. So in this scenario, the client put in 150,000, and we financed $1.6 million of the total project. So that's, again, something that really could benefit your client, because the leasehold improvements or renovations are added to the mortgage, and they're termed out over 25 years. The client has one simple payment, and life's easy for them because they don't have to worry about a leasehold improvement loan of $250,000 over 5 years, because that would be a huge impact on their cash flow, right? If we took the $250,000 and used it over 5 years, it's $50,000 a year in principal plus interest. So terming it over the 25 significantly helps their cash flow, and the client's going to be able to, grow their business and run their business easier because of that. And so that's a lot of value you can add with your, commercial real estate clients by, recommending that, and asking them, do they have any leasehold improvements do they have to do? And are they going to finance that? And if they are, adding it with your mortgage is probably the smartest thing that you can do to save on your cash flow. The next example here is a construction financing. It's a manufacturer of metal products who wants to purchase land and build a new plant to expand its operations. We don't see so much of this around, but I've done actually some construction financing, mostly more so in Maple Ridge, where there is more land to build. But I've had clients in Poco that are also looking, or they wanted to expand their building, etc. And so this is not a Vancouver example, clearly, but the purchase of land, bare land, would be $150,000, and the construction costs are $920,000. And this is just for example purposes. So the project total is $1,070,000, and BDC agreed to finance $800,000 out of that $1,070,000. which works out to be 75% loan to value. But we determined that the client had to put in some of their own personal equity of $135,000, which can come from a home equity line of credit, and the business currently had $135,000 of working capital that they had to inject towards the construction. And so we do it actually the same way that we did a regular commercial real estate mortgage. We basically we have the client put in their money, and then we finance the difference, based on invoices on the construction project. And so, in this scenario, we were able to help out our client by building, they get a larger facility with more space for added equipment, which means they can increase their revenue because they have a more efficiency with this new layout of their plant and better chance of sustaining, the company in the long run through competition, et cetera, because they're in a more efficient operations now. The next example here is another one. It's real estate supplier or income property. I'm not sure. Yeah, so a real estate supplier wants to purchase a property for a long-term lease to a manufacturer, and which is great because the manufacturer is willing to sign a long-term lease, because that's the key to this type of transaction. Unleased property is unable to be financed because we don't know where the income is going to come. So that's why there has to be at least a 5-year lease in place. So in this scenario, the building was $1.8 million. And for a total, so we decided that the client, based on the strength of the borrower, they had to put in $300,000 of shareholder investment or shareholder equity, and we would finance $1.5 million, which is a pretty good scenario. We probably don't see too many of these in the Metro Vancouver or market, but it's around 80% financing. And so because there was a manufacturing company that signed a long-term lease with them, we determined that the gross income of the property was $315,000 a year. And so based on the cash flow generated from this guaranteed gross income, less the debt servicing costs, that the numbers work out. And by that, I meant the principal and interest on the mortgage and all the other expenses, property taxes, et cetera, that would have to be paid for. We determined that the cash flow was positive, and we were willing to lend the client the money to buy this investment property. And again, the key is that they had a long-term lease in place. It's all about the tenant, just like when you're renting out your residential properties. It's the quality of the tenants, and that's really what helps the bank lend money in that scenario. It's really difficult to lend on an investor property if someone comes to the bank and says, I want to buy this building, but we don't have it leased out to anyone. The banks are typically not interested in financing those scenarios because of the the risk, because there is no guaranteed cash flow. But if you have a 5-year lease, at least that locks the tenant in, and the bank can determine exactly what the lending value, et cetera, is on the property. Lastly, the part that we kind of started out with was our advisory services, and it's really a way of helping entrepreneurs run a better and more profitable business. Nothing more than that. Everyone has challenges. A lot of them are with sales and marketing, as I'm sure you guys know. And other ones, we have, everyone hates numbers. So financial management is a key area, that business owners have to, they don't want to do, right? Everyone typically stays away from the things that are the most difficult or the most kind of, I don't want to say annoying to them, but, harder for them. So and financing is one of them, right? That's why they're talking to people like us to help them with their investments. And so we can help out different businesses with these areas. If you need some help increasing your competitiveness and profitability, assisting clients take advantage of their new investment, design a new plant layout, increase sales, optimize technology, managing your business, finding new markets, online sales optimization. We're also doing another one right now called this Canadian Digital Adaptation Program. It's where we basically audit all your different, the company's online connectivity, the way that they're using technology, all the software, contact management stuff. And then we complete a report and determine like where you are in the scale and provide you a roadmap to improve your business's technology and technological capabilities. And with that, there's a way through the government website to apply for a grant to cover 90% of that cost. So that's actually a really good offering that's out there right now. But yeah, so the long and the short is that BDC isn't just a regular bank. We do have kind of custom tailored leverage financing products for commercial lending and for businesses. And then we also help improve their, improve the business, which is unusual. Normally banks are trying to sell them something. We're trying to help them become more profitable, because in the end, it's better for the Canadian economy. And this is another slide on here. We do strategic planning, financial management, human resource management, technology consulting, and leading change within your business. Sales and marketing strategies, digital strategies, operational efficiency. For food clients, we do like ISO certification and HACCP safety. Like we do all sorts of different things. There's really isn't anything on the advisory side that we don't do. And all of our advisory is typically cost less than what it would cost a business to go to a big accounting firm to hire them for something like this. And part of the reason is because of BDC's mandate. It's really to help the small and medium-sized entrepreneurs. And so by helping these private businesses grow and offering them more favorable solutions, the companies are able to grow more, and they fit with our mandate. So it's quite interesting, and I'm happy to take any questions or anything that I'm sure I covered a lot and I was talking a lot. So happy to answer any questions that you guys might have, if that's allowed. I can't hear anything though at the moment, so. I hope I didn't bore anyone. I'm having trouble. Really, you're not clear.
Picking up this.
There we go. Can you hear me now?
Oh, they're beautiful.
Beauty. Okay. Now suddenly we lost the speaker though. So again, we're doing a new system here, so we're testing things out. So we do have a question, and I'll just repeat your answer back so everyone can hear you. But we have a question in the chat that says, "Do you deal with mortgage brokers?"
Yes, I do deal with mortgage brokers.
All right.
Okay.
There wasn't much else
like from a mortgage broker.
Teresa, if you want to type in your question a little bit more details, what you're looking for, we get Michael to answer it. And is there any questions that anyone has for the BDC? Yes, Ray. All right, for commercial loans on building, what kind of rates are you seeing? Mortgages.
I just gave a very good rate, and this is our top rate, but 5.8% for 5 years. 5.8% for 5 years.
Is that 25-year AM or?
Yep.
25-year, yeah. Excellent. Any other questions from
That's
Michael?
our top rate.
What kind of loan to value?
What kind of loan to value is that?
95%. But so this is, a bit of a unique scenario in the sense that the client was very, the strength of the client's financial statements allowed us to do that. We actually, So, I mean, it really depends. So, and the bank is not scared of the market or the way the real estate is at the moment. That hasn't impacted our lending. Like, obviously, we're a bit more cautious. But, I kind of what Cam was saying earlier about how the rates have kind of peaked. It seems like, we were testing clients' income on higher rates before. And so now we're not really doing that. If you can afford the current payment at today's rate, we're happy with that.
You did say you can have it tenanted, right?
You did say you can have it tenanted, right?
Yeah, so a tenanted unit we won't be doing at 95%, but yeah, it probably, and the way the Vancouver numbers market, so like this is the whole thing with Vancouver is that based on the rent, we determine the value of the building, and you probably would only get around 50% in Metro Vancouver based on rents. So it's the same problem kind of like in residential real estate with cap rates.
What is your DCR?
We're just looking for a 1-to-1. I mean, obviously above 1 is good, but 1-to-1.
You should see Ray's face here who's asking the questions. He's the eyes got really wide when you said a few of those numbers.
Cool. Well, yeah, I mean, I'm happy to talk about it. If you want to give me a call or email or something anytime. But yeah, no, I mean, it's when you learn about it, I do think it's surprising because like you don't realize what else is out there.
And just to clarify, you're at the downtown office now, right?
I am, yeah. But I can come out to Coquitlam, no problem. I live in Coquitlam. I'm in Coquitlam right now.
Ray's office is up in North Vancouver, so not that far.
Oh, perfect. Yeah, okay. There you go.
There you go. All right, does anyone else have any questions? Yes, Rainer.
Yeah, is this a government-funded business, the BDC, and is that how the risk is mitigated for higher risk?
So the question is this a government funded, like BDC is government funded?
Yeah,
and
yeah, I heard the question. Yeah, it's kind of a difficult one to answer, but in long and short, I mean, the real answer is no. But yeah, in the sense that BDC was started by the government, so they did fund us initially. We don't typically receive government funding. Obviously, during the pandemic, there was a bunch of COVID lending that we did, which was the government did add, supply us with money to lend out during that time. But no, all this lending, BDC is a profitable government company. I know. Who would have ever guessed that the government owns a company that makes money? And they have, and we actually pay them a dividend every year because we make money on our lending. We're a bank. We borrow money and then we lend it out to clients for a profit. And actually with that profit, we're able to kind of subsidize our advisory services that we offer. So no, we're not financed by the Treasury Board. But you probably heard about BDC venture capital and investing and that sort of thing. That money is directly invested, was started by the government. So I hope you got that answer, but no for the commercial real estate lending.
Awesome. Excellent. Any other last questions? We'll do one or two more. Teresa, if you're still on, if you want to clarify your question with the mortgage broker, but I think we got that one. All right. Okay. Awesome. I think that's it. So, Michael, we really appreciate you joining us today digitally. We apologize about some of our technical things, but
thank you. Well, thanks for having me. I wish I could see the crowd, but next time. Oh, you're going to turn it around for me? No.
One second. Let me swap the.
Oh, there we go. Hi. Hey. Yeah, that's great. Awesome. Well, yeah, if anyone ever has any questions, feel free to give me a jingle or an email. Happy to talk some more. Thanks, Cameron, for having me. Really appreciate it. So thank you, and all the best on everyone's real estate investing.
Sounds good. We really appreciate it, and we will be in touch. If anyone wants to get in contact with Michael, just shoot us an email, and we can definitely introduce you guys. Thanks again, Michael.
Thank you very much. Have a great evening. Bye.
All right. Okay. Let's mute that. There we go. And voila. We're going to move into some hot deals. So what is going on out there in the market that you guys can invest in today? We find that the market is definitely heating up. There's some great opportunities out there. But again, inventory is low. So I say two things to investors right now. If you guys want to take advantage of the market, you need 1, patience, and 2, speed. Kind of sounds like it kind of goes against each other. But what I say by patient is you got to be patient that you guys find the right deal. And when you find that right deal, you got to move quick to get it locked down. Because again, you don't want to wait too long, because if you do, you know, the classic saying we'd say for a buyer is if you sleep on it, you might not sleep in it. Well, if you don't put that offer in, you might not be buying it. So let's take a look. Here's a great one that we have right now. This one is out in Harrison Hot Springs. We showed it to you guys last month. We are actually getting some real interest in here, and I think there's some awesome opportunity for the right operator. This is Lillooet Avenue in Harrison. It is 7 cottages that are commercially zoned, so you can run Airbnb. You can allow short-term rentals on them. It's just 1 block from the beach. So if you guys are looking for that awesome kind of opportunity, that's where it is. You can even spend some time there yourself. The yearly revenue is exceeds about $500,000. Huge Airbnb potential. The sales price right now is about $5.5 million, and you could potentially get a VTB. The seller is open to it, up to potentially 80% at 3% interest on a 5-year term. So that's a great opportunity. Here's what the numbers look like. I'm not going to run through those, but if you want to screenshot them, or if you want to go back and take a look at this presentation after, it is on YouTube, so you can check that out after to grab the numbers. I'll leave that there. I see a few people snapping the numbers. Kelly? Okay, so Kelly just said sales are up 25% already this year. So there's lots of room for growth. And we're going to just kind of mention this one again. There's still some good opportunities. The developer has not jumped up the prices yet on this project very much. So I think there's still a good buying opportunity. This is the Jacob in Abbotsford. Prices are starting at about $389,000, but there's not a lot of those units that are left. They're 1 2-bedroom homes located in the historic area of downtown Abbotsford. Feature some great open space, everything like that. Prices again starting at $389,000 for a 1-bedroom, 1 in flex, about $419,000. So great prices in the project. Right now you can get in on a 10% deposit. So that's 5% after your right of rescission, and then 5% within 30 days, and then obviously nothing until close. And we can get in right now with a $1,000 assignment fee right now. So that's a huge bonus for anyone who does look to eventually flip the contract in the future. This is where it's located. So this is Abbotsford here. You've got Simon Fraser Way running down this area and Highway 1 over here. So it's a great little area. And that is still currently selling out. So if anyone's interested, let us know. And lastly, well, you got to get your phones out. We got some QR codes for you guys because, you know, we're all used to doing that now thanks to COVID. So don't forget, you can follow us on our social media. This is the Kelly Fry team on Instagram, Facebook, Twitter, TikTok, and YouTube. So you can check us out there. I'll leave it for a second. I see a couple people. All right. Oops. You can also follow Kelly and I on TikTok. And we actually added a TikTok. Yeah, it's right there for the Kelly Fry team. So we've got some interesting videos that Kelly and I are both putting out. Sometimes you might catch me dancing in the odd video. I know Taylor likes to point, you know, those ones out and make fun of it. But you know what? That's what happens when you're going viral, buddy. All right. You can also check out the Manning Up on Real Estate podcast. So we've got some great episodes that we had in there in the past, and we are working on some new episodes and hoping to talk to you boys and getting you on the podcast here soon. And we do recommend you guys join us on our private Facebook group. This is a great way that you guys can stay in touch with the team, with all the other investors in the room here as well. We post, different opportunities in the group. You have a chance if you have questions or you're looking for financing on a deal that you have, post it in the group. We're trying to create a BC community here, really tight-knit group of people who can all support each other and grow. And every single Monday, I do a Monday morning market update. And the benefit of the Monday morning market update is that unlike the stats that I typically show here, which are the monthly stats, you're going to get the boots on the ground weekly, like play-by-play. What's been happening with open houses? What are we seeing in terms of inventory? What are the strategies that we're seeing working? We also go a little political depending on what's going on, if there's policy changes, interest rate announcements, everything like that. So it's a great way. So again, join the Facebook community, and then you can catch me doing that on Monday mornings. And, what's going on here? Jury, the slide didn't pop up. Oh, there we go. All right. So we had the contest going. So again, posting on the social media. So thank you to everyone who's been sharing and posting. We've got some great posts here. We got a good one here of me riding. I got a ride down here today. It was kind of fun, kind of nice. But for today's winner, we do have a book we're going to be giving away. How many of you guys have heard of Robert Kiyosaki? I would assume most real estate investors have heard of him. If you haven't, I highly recommend you go check him out. The pivotal book that most people start with is obviously Rich Dad, Poor Dad. But today, Kelly has donated a book called Fight Fake with Facts with Robert Kiyosaki. So we're going to be giving this away. It's a nice thick book, and it's got a lot of information in here to help you guys get past the stuff that's out there that might be holding you back and look at the actual facts that can help you guys grow. So the winner today is John Lee Rise Mortgages. Did I get that right? Yes. All right. Congratulations. All right. There you are, my friend. That's all yours. Come see me after. We'll grab a photo, okay? All right. And with that being said, then, our next month's meeting is May 18th. So grab your calendars, mark that one down. Or to make sure that you guys don't miss anything, join the Facebook page. Or you can also join us on meetup.com. This is where we do post all of our upcoming meetings, and it will notify you when we have a meeting coming up. With that being said, that's basically all I have for you guys tonight. Thank you so much. We are ending a little bit early, so that way you guys can get home, get to bed. We have a little bit of pizza left there, some drinks, and meet someone new. Really start, growing your network out here. That's the whole goal of this community, and that's all I have. So thank you very much. Okay, so those on YouTube, I'll talk to you guys. Got a couple of questions. All right, so YouTube, let me get down here. If you guys like to get in contact with me, the best way is to either find me on social media at Cameron E. Manning. I'll put it in the chat as well. Or you can email or call me. My number is 604-365-9771. Or you can email me at CameronEManning@gmail.com. I'm going to put it all in the chat for you guys here. Thank you so much for tuning in today. I hope you guys enjoyed it. Again, we're going to keep ironing out this new technical stuff with the YouTube Live, because that's new to us today. But we are hoping out we can really get some great presentations for you guys. Thank you again. I'm going to drop it in the chat, and then we're going to end the stream here.
Really good. They won't do any other than a product. But they won't.